Hello, this is Karsten versus the market, and this video is brought to you by Sally Sells Seashells by the Seashore. No, but seriously though, this video is about growing a small account. It may not be the way to do so, but this is certainly a way to grow a small account, and in this case, it's my way, because I started with and now I once again have small accounts that I'm trying to grow. So yes, with this video, aside from joking a bit, I'll also be getting real, talking about my portfolio. So first of all, to grow a small account, the first key for me is I trade options. Yes, options can be riskier than shares can be. However, that's why, like my first video talks about, I have a short-term and long-term options trading strategy that I consider safer than most. And also there's rules to follow, like with the options you buy, you want plenty of time before they expire, and you want your strike price to be as near to the share price as possible. Those two details will kind of help your options hold value. And also, a second key to growing a small account is I diversify. I buy all sorts of different things. So the main reason that I trade options instead of shares is because with a small account, there's a lot of stocks that are good, but the share price is simply too high for a small account to buy a number of shares that's meaningful. And also, not only may options cost less than shares, but options also return higher profits than shares. So again, with safety and other keys to the plan altogether as well, I'm trying to safely approach growing a small account. So here's this, Hycroft Mining, ticker symbol HYMC, if I pronounced it right. I didn't really think this was a good stock. I just figured that I would like to buy some dirt cheap, super crash stocks to add to my diversity to help grow my account just in case. So when this was like 20 or 30 cents recently, I bought a 250 call of it, and then it ran to $1. Now, when that happened, you'll notice here that the 250 call that I bought February 24th, that expires April 14th, I paid $3 for. And then I sold that a week or so later at $25, which I guess is about, 800 or 900% return. So I nearly 10 times my money there. Of course, again, that's a small value returning a relatively small value, because again, it's a small account that I'm growing. However, it is simply an example of how diversifying and trying to buy as many opportunities as possible, especially with cheap options that offer high returns, can all kind of work together to build your small account. Now, I'm surprised that this ended up going higher. After it cooled off to 60, I wasn't expecting it to climb to 258. If I would have held that 250 call and not sold it till here, I of course would have made a lot more than $25 return. But at any rate, I kept to the plan, bought it low, sold it high, got out. That's the safe way to do it. So you can't really fault yourself for doing things the right way, instead of wishing you had perfectly predicted the future, which isn't possible. However, with another example that I don't really consider a great stock, but I wanted to include in my diversity, I did take further steps. So after buying a $5 call for $14, which I later sold for $85, which I guess 15 to 85 the next day apparently. That wasn't the goal, obviously. Profiting one day wasn't probably the plan, but that's like what, 500-600% return there. I also had a 750 call I bought for $5 that I sold for $51. which is like, what, 1,000% return, I guess? And then after taking those profits, what I did after that, instead of just moving on, and that's when Sun W, by the way, recently jumped from like, $2 up to near $5. What I did after selling those calls and taking my profit is, with a portion of my profit, not all of it, I bought a new call just in case it keeps going up, a cheaper call, and I bought a put in case it turns around, which in this case, it did turn around, so my put may be on its way up. But yeah, that's kind of another example of me diversifying, and instead of just getting in and getting out, which again, I didn't expect these to run so soon. In fact, this one, Sun W, I'd already been buying slowly and holding for months. So not all the profit counts. Probably only half the profit counts, and the other half was actually losses from previous contracts expiring worthless, because there's been quite a few months of decline for a lot of these growth stocks, we'll call them. And so that's kind of the idea here, is diversity. There's also better examples that I've not necessarily profited from yet. For example, Sophie is one that I like and believe in, and it's pretty much an all-time low now. And so I've been buying it, and I'll probably buy more of it. I like that rating. I like the stock. I like that $20 fair value. I like that it's, earnings have recently grown a bit from where they were before. And so I consider it potential. I think at the very least that this stock will probably recover to $15 or $20 whenever the economy recovers. At least an indirect recovery if there's no direct reason that Sophie grows. But if the corporation keeps progressing, it'll probably grow on its own as well. This is one that I've been buying for a while. I think I have what I'm holding now, and I think I did have some profits and some losses both from it before. And that's another one of those examples. Another one that I also like, that I'm also holding aside from Sophie, is Palantir. Palantir also, at this point, is back to like its lowest ever, and I believe it will get back to the $15 to $20 range, so I'm holding some calls of it. And that's kind of like for my long-term options trading strategy that my first video mentions, is I'm collecting more and more call options of stocks that I believe will at some point this year recover. And aside from that, though, there's also my short-term goals. For example, NIO. NIO is super cheap right now, and it has earnings soon. So because it's been beating earnings expectations recently, and it's a pretty popular stock, it's often volatile. My plan is to have a call and a put both of NIO, so that if earnings make it run or dip, I can profit from either the call or the put. And usually, if your call or put sell at a profit, that profit usually outweighs the other contract that you may take a loss on. Worst case scenario, if NIO's price doesn't change at all after earnings, no rally or dip, and I can't sell my call or my put, then I'll probably be able to at least break even and get out of it. In which case, I'd probably hold a long-term call of it. Probably like, at least a $20 call. I'm sure it'll be back to the $30 range in the future, probably later this year. Worst case scenario, next year, when things start to finally get better. So yeah, I think there is an example of short-term profit recently. Again, the first two stocks were pretty short-term, but not really with Sun W, which I'd already held for a while, even if the new contracts sold pretty shortly after. But in terms of my actual short-term trading strategy returning results, there were one or two examples recently, if I can remember what in the world they were. Probably a stock that had earnings, and then I may have played the fluctuations of overstock as well, which, in my opinion, is also a profitable, undervalued corporation. Yes, I believe that this is one of the ones that I short-term traded, and then after profiting from it, I bought more just in case it climbs again. So yeah, at any rate, I can't remember for sure, but basically, whenever there's a catalyst like earnings for a good stock, I may buy a call and a put of it so that I profit from one or the other or break even and move on. AMC, I think, is one that recently I've traded a few times profitably. And then, aside from that, I also buy options to hold long term of stocks I think will recover later. I still have a short-term call on this that I bought with the profit in case it goes back up, but I'm not too worried about it. Even if it expires worthless, the cost of it should be less than the profit I made from it from before, or at least that's the goal. So yeah, it's basically kind of how I'm working on building a small account here, is that there's tons of undervalued stocks that should be way higher value later, and I'm buying a bunch of options in them for later. And if they crash further, then great, I'll just buy more call options for later. And aside from that, I also have the short-term ones. When a stock like NIO, that's popular, has earnings soon, that's also a nice opportunity, in my opinion, to buy a call and to put short-term. I believe there's others like Jumia, Rocket Labs, quite a few stocks, honestly. I've probably got like 30 different stocks that I have calls of, and 2 or 3 that I have puts of. And just like in 2020, all that crashing eventually turns around. And stocks that I was calling growth stocks earlier, like space, electric vehicle, solar, cannabis, etc., they often crash the most when there's drama, and then they often run the most when things turn around. So anywho, I've rambled enough. This is basically it for this video. As usual, I'm not a financial advisor. I share for fun and for learning purposes, not just for the viewer, but also for myself. Just all as part of basically talking and sharing is pretty much the goal. So hopefully this video is helpful, or maybe it leads to some feedback that's helpful for me. And with that said, have a good one.